A lot of people may not like to hear this, but when we do see inflation tick up like we are starting to slowly see now, it's not going to show up in the major economic models until maybe a year down the track. But in the short term, it's a great signal for assets like Bitcoin.
So MYX Finance is up 74% in the last 7 days, followed by Aster, which is up 22% in the last 7 days. And what's interesting about them is they're very heavily correlated. They are both perpetual futures decentralized exchanges.
Everything's pointed towards, well, likely inflation because we're seeing growth even in the US last week. They had a higher than expected reading for Q2. So it seems like to me, the base case is really that we're going to go higher before potentially, eventually, maybe the bubble pops.
Welcome back to another episode of Tapping Into Crypto. I'm back with the great man, Pav Hunda. Pav, how are you doing over there, mate? You're looking fantastic as always.
Oh, thank you, sir. Well, after a weekend like what we had, how could you not be happy?
I mean, I did say it last week. Brisbane's on top. We're the best sporting, we're the sporting capital of Australia, and we proved it.
Sucked in Melbourne. I should have said that.
Brizzy Lions claiming the AFL granny.
To be fair, the score was not reflective of how that game played out. It was a good start. It was tight.
It was an awesome game, but we came out on top, and then the Bronx, which I was fortunate enough to be at.
Yep.
Incredible win over the four-time reigning premiers.
Would that be the reason why you've been hard of hearing this morning?
Yeah, I have lost a bit of hearing. It was so loud, but it was incredible. So unfortunately not going to make it down for the grand final, but I'll be watching nonetheless. So make sure to check that out.
Good luck, boys and girls.
Yep, absolutely. But more importantly, we've got crypto to talk.
Yeah, we do.
So I think the market kind of capitulated from when we last spoke. It's sort of settled a little bit, and it's a you could probably say it's a bit boring right now, but we've got some key news stories to cover. We've also got top movers. But what we're going to really focus on today is we haven't really wound back the clock in a while and focused on, some of the real fundamentals and basics of crypto, the stuff that gets people over the line being like, okay, I now get it. I'm now more confident, because often people ask questions that they may be embarrassed to ask, or they don't ask them at all, being like, I just don't get how it's money or how it goes up or how it even works. So
yeah. And we've been wanting to do something like this for a while, but I don't think we've ever nailed the execution side of things. So it'd be great to get everyone's feedback, what they think about this. We've actually got some real takes and questions that we've collated. Even if you're new or you've been around in crypto for a while, some of these questions, you've been in it for 1 or 2 years. You'd struggle to answer it at a barbecue party.
I think it's even good for us just to because when you get into something and, like it quite technically, it's hard to really break it down and dumb it down for someone who's new to the space. So what we'll do is, we'll try and make it make sense for everyone. And we'll leave that till later in the show. But first of all, we'll dive into the top movers this week.
Yeah.
So
let's get everyone what they need for the week.
Absolutely. So what do we got at the top there? We've got two pretty significant ones. So MYX Finance is up 74% in the last 7 days, followed by Aster, which is what we talked about last couple of weeks, which is up 22% in the last 7 days. And what's interesting about them is they're very heavily correlated. So they are both perpetual futures decentralized exchanges. Now, that sounds like a mouthful, but explain what that means.
Well. It's like just a different trading venue. So obviously people might use the likes of like SwiftX or Coinbase to do their trading. You now have that opportunity to go on a borderless platform on-chain. Those products, have really evolved over the last 4 years when we look back to what it looked like a couple of years back. It just seems to be a high affinity for the market. These guys are giving rewards, they're giving points, they're giving airdrops. The whole community is really getting behind using these platforms in hopes of getting a lot of these airdrops and rewards, right? So I think that's what's driving a lot of the demand.
And I think the narrative as well is playing out. Like both of these projects, Aster and MYX, are both based on the BNB chain, which is the Binance blockchain essentially. And they're basically challenging Hyperliquid, which is,
super highly successful.
Yes,
right?
exactly. And it's Hype is one of the top coins. I think it's ranked as number 10 or 11. And it gained the most market share, but these guys are slowly eating into that. So much so that these coins are now in the top 40 in terms of market cap. So I think even if you don't care to use these exchanges, like, when you hear perpetual futures trading, decentralized exchanges, it might sound all a bit technical and complex, but you can look at it as an opportunity to, jump on the narrative that is these exchanges becoming so popular and gaining more usage.
Yep.
And that's what we're seeing. And Asta in particular is basically heavily linked to Binance. So what happened is they were like two different projects. I forget the names, but they merged to become Asta.
Yeah, it was a terrible name. I forget too.
Yeah. It was like APX and something else. And then anyway, so they launched as Asta this year, and one of their core investors from the very beginning was Binance Labs, which is now like YZ Labs or something. They've changed their names. Anyway, same thing essentially. And CZ, Binance's founder and former CEOs, came out and, publicly praised the project on his socials. He also disclosed that several former Binance employees now work there. So obviously very close Binance ties. Yeah. They launched it. They put a lot behind it to make sure it was a successful launch. And obviously we're seeing that like it's now in the top 40 coins. And I think as well, that's what's kicked off this MYX trend as well, right?
Yeah, and I think everyone's going to look for that same copycat trade. I think we were speaking last week about similar platforms launching, doing the same thing, offering airdrops.
Yep.
I think we might just see that sort of be a theme for a little bit. So just keep your eyes open. But I would, just be cautious on once these platforms stop doing their point systems or stop doing their airdrops, will the market want to keep investing? I don't know. Asta, I would say, because it is Binance, and they've said it themselves, I think CZ even tweeted, like, we understand this platform we've created, it's going to take market share away from Binance, their centralized exchange. So they kind of see this as a play in the future where there just won't be, people will expect that diversity of option. They'll want an on-chain option. They'll want a centralized option.
If you want to onboard, your AUD or USD, you need to go through Binance.
Correct.
If, they're probably, or like SwiftX, whatever it may be, to start trading on these platforms.
Yeah.
And as well, like it's on the BNB chain, which benefits them. They have a whole ecosystem of assets. It's not just the Binance exchange. They have obviously Binance Labs, which is now renamed. They have the BNB chain.
Yeah.
What else have they got? They got
heaps of stuff. They've got like DeFi lending platforms, but they've been notoriously prone to hacks. So Venus Protocol's one there.
Yep. They've obviously got the BNB coin.
Got the BNB
which,
coin.
Is another top mover. Like it's surpassed $1,000 USD and sort of maintained that ever since like the market came down as well. So that's good to see. But I think it's on the back of a lot of this hype around Asta and MYX as well.
One other one I wanted to call out, that's a bit of a different one to add to the mix. Quant, ticker QNT. Remember this one was circulating quite a bit, maybe 2 years ago. But they have most recently had a bit of a price rise, and it could be attributed to the launch of something called QuantNet. So that's a programmable settlement infrastructure network developed by Quant Network. So that simply just means that they're really shifting their focus into the whole payment space, like we've seen how disruptive crypto technology can be for the likes of, cross-border settlements, instant payments, money transfer, all that sort of stuff. They're basically looking to provide institution and banks basically solutions towards managing and effectively having tokenized money and tokenized assets run on chain. So they're going for more of that infrastructure play. You could draw parallels to maybe something like Chainlink. I haven't quite looked into the nitty gritty, but obviously the market did like what it was hearing regarding that particular news announcement. So one to maybe just keep an eye on, see how they're progressing, look for partnerships, similar trends that we've seen in the past, just look for growth to see if it's going to get adopted. So I think that's, again, we're seeing different trends in the market now, which I know we were saying last week, which is refreshing. It's not all just meme coins and pump.fun coins.
Yeah.
So maybe a bit more speculation in the market on what's going to be the next play.
Yeah, absolutely. All right, well, let's move on to our next segment, which is covering some of the key news. I know the US government is in a bit of shambles right now. What's happening there?
Yeah, so a lot of people may not be aware of this, but their federal government has a runway or a budget, and when it comes to an end, they basically got to get a group of people together, Congress, and come to a decision on how much money we're going to put back in, like what's the budgeting going to look like, et cetera, et cetera. Now, this is also, unfortunately, an opportunity that both parties use to kind of leverage each other, get their agendas across the line in the form of also the fact that this policy needs to be sorted out with obviously sooner rather than later. But what this also creates is just instability and just some unpredictability in the short term. So the last time we had a shutdown was 2018. It was for 35 days, which was the longest one on record. And I think we believe, Trump was also in administration during that period as well. But during that shutdown, we saw Bitcoin dive, I think it was 12%. And we saw the S&P even tank 7% as well. So it was a huge, huge sell-off. Not a great time of year, all that sort of jazz. But historically, these shutdowns haven't lasted anywhere more than 1 to 7 days maximum in the past as well. So we've seen what sort of, emotions and political sort of spats usually start off. We've seen this year from Trump and co, like with the whole tariff war. Like we can all sort of say that obviously they had a plan. They just obviously did a whole bunch of stuff just to, I don't know, for the sake of causing a bit of a ruckus. So whether or not they use this as another platform to cause a ruckus to get what they need over the line, who knows? But that's the one thing I just call out to keep an eye on. The next 24 hours, we'll have an idea of what the playing field looks like. So by the time the podcast comes out, we'll have already seen the impacts. But if we're trying to look at something in the short term to maybe understand what the market's thinking, I think this would be an important one to keep an eye on.
So what are some key dates here? So you said tonight something's happening, but
yes,
like as you said, like last time, it could last 30 plus days.
Yeah, it's basically comes down to, again, Republicans and Democrats coming to an agreement, basically signing off and that this is the outcome that they're looking to go forward with. Could take days.
Yeah.
Could take weeks.
Yeah.
Ideally, for all of us, we want it to be as fast as possible.
Yeah.
But whether or not they use it as a way to jab at each other for a few days and everyone else kind of suffers, who knows? But even in the past, when it has been shut down for a few days, there has been a little bit of a sell-off and cooling and risk on markets like the S&P. But once the government resumes, even before it resumes, we do see the market recover a little bit as well. So again, if we're looking at Q4 as being potentially a bit of a drawdown before we see maybe some sort of rise, this could be a catalyst for that I'm keeping an eye on. Like we just don't know, no crystal ball.
Yep.
But yeah, big one to keep an eye on, I think, in the short term.
Cool. And then we've got some insider trading news.
Yeah, so we're talking about Hyperliquid and the likes. Everyone's seen the digital asset treasuries that have been popping up. We've been speaking about them nonstop this year or the last couple of months.
Just explain that, like in simple terms.
So we have companies in the US. They trade on stock exchanges. They could be a logistics company. They could be, I think one was like a distillery. Basically, they're being converted into just digital asset treasuries. So we've seen the success of MicroStrategy, what they did with Bitcoin.
Yeah.
Basically seeing copycats of that, but with different assets. So we've seen Ethereum be one, Hyperliquid be one, Solana be one. Ripple, I think, has got one as well. IP. So there's all these altcoins, treasuries that are now starting up, and there's basically concerns by the SECs and the internal watchdogs that a lot of these stocks saw a lot of volume and a lot of rises in their pricing before they went into this conversion and this, announcing to the market that this was what was going to happen to that stock. Because a lot of these companies were dormant, they weren't doing too well. So obviously they were attractive enough for someone to go buy them and convert them into crypto treasury companies. So could be a little bit of FUD in the short term as well. Again, just more reasons why we might see some headwinds, especially if that does turn into some sort of further concerns around those digital asset treasuries, and tokens around it might get maybe sold off a little bit more.
Yeah, I mean, like we've talked about the SEC a lot, and particularly in the last administration being, enforcing against crypto, and it wasn't a good thing. That's not the case here, because this is actually something that needs to be cracked down on.
Insider trading.
Exactly. Yeah. Insider trading is purely illegal. It's not like an issue to do with crypto. It's like these guys are obviously trying to capitalize on, a big shift in the business direction by going from a distillery to then investing in cryptocurrencies, and they know that is naturally going to cause a huge upshoot in the price. So, the fact that they're cracking down on that is a good thing.
Yeah, so there is just something in the short term, again, I think, to watch. I think the longer term, the market still looks solid. Macro looks solid. There's a few data and key points that are coming out that if they don't get too disturbed, like again, once we have them, the market should hopefully be more confident. And even then, like we are seeing, again, like we're talking about things that are looking more and more solid in the market, even the ETF landscape, it just continues to evolve. Like we've seen more listings. We've seen BlackRock even come into with a new product. It's a Bitcoin yield product, which a lot of people may not be familiar with, but just think of it this way. Instead of buying the current BlackRock ETFs where it gets you direct Bitcoin exposure, it's more about maybe giving up some of that upside to just get a consistent yield, which a lot of people may just prefer that as a part of their investment strategy. So again, we're talking about this is the sophistication of the crypto market coming to front here. That's what we're seeing here. Again, like BlackRock just again putting their best foot forward and giving the customers more options.
Before we jump into this last segment where we're going to break down some key questions in crypto, I just want to get your thoughts right now where we sit in the market. Like we've talked about it, Q4 in years like this are often very green and very strong. Do you think we're currently sitting in position to have, a strong October, November, December, or is this time different?
No, I think, again, like the key things that I'm watching in the market are growth, inflation, as well as liquidity. I think liquidity is becoming less and less of an issue right now. It's more about the growth in the market and as well as inflation. Now, a lot of people may not like to hear this, but when we do see inflation tick up like we are starting to slowly see now, it's not going to show up in the major economic models until maybe a year down the track. But in the short term, it's a great signal for assets like Bitcoin. Bitcoin is highly correlated to when things like even the 5-year real rates, which is just basically looking at interest rates paired up against inflation rates. When that starts to rise, we start to see Bitcoin start to rise too. Like it's a very correlated market. So I think if we're looking at the macro perspective, like what's more likely next, inflation or a recession? Everything's pointed towards, well, likely inflation because we're seeing growth even in the US last week. They had a higher than expected reading for Q2. So they're blowing expectations out of the water in terms of growth. So it seems like to me, the base case is really that we're going to go higher before eventually maybe the bubble pops. Yep. But for now, there's all reasons why Q4 should be green. I'd be looking for a great reason why Q4 shouldn't be green at the moment.
To change your opinion.
Yeah. And another thing, if people do want to keep a track of these sort of things at home, just even in the news, like just be checking in on Bloomberg or Reuters or whatever your news sources of choice. This is a time of year we also see China start to do some medium-term market operations where they basically start injecting money into their economy. They've got a big issue right now where they're just not growing fast enough as well. So that also has a positive effect on global flows, which then helps risk on assets as well. So that's a seasonal tailwind that hopefully stays true this time because Trump has thrown a lot of things into the deep end this year with seasonality going out of the window. Things that we'd expect haven't played out, but I'm kind of expecting something like that to still come out of China into the back end of this year.
Okay, and last one, what's your prediction for the Bitcoin price by December 31? Like the top price we're going to hit?
No idea. Like it could go wherever it wants, but if you had to gun to my head, 150?
150 US?
Yeah, okay. 150.
That's pretty strong.
Yeah.
I think at our predictions episode at the start of the year, you said 160. So
yeah, did I?
That sort of lines up.
Okay.
We'll have to check the tapes on that one.
Yeah, okay.
It sounds familiar.
Yeah. I hate price predictions because you just don't know.
Well, that's
it's a bit of fun,
but
right?
everyone loves them.
Everyone loves them.
Yeah. Okay, let's get into our segment that we mentioned at the start. So as we said, we've got a number of questions that we actually sourced from people in the business. So at SwiftX, so new starters, people who haven't got a whole heap of experience in crypto, and they've just asked us some simple questions they may not have been, too forward about asking before because it might have been out of embarrassment or just like not knowing the right questions to ask, right? So, which is really good, and we're going to try and break them down. But first of all, a question that we got asked is, what is the difference between a coin, a token, and a crypto ETF?
It's a good question because I'll be honest, I think I was like maybe 3 or 4 years, probably 3 years into crypto. I couldn't tell you what a difference it was between a coin and a token. You hear it and you're just like, oh yeah, that's what it is.
They're used pretty interchangeably, but there actually is a separation between the two.
That's right. So like a coin, we'll use Ethereum. So Ethereum, basically, it is a coin. It creates the Ethereum ecosystem. The whole network, as we know, is the ETH network. So Ethereum, in that instance, because it is the asset that basically is used as like the gas fees, running that whole ecosystem, that's considered a coin. The same way Bitcoin's considered a coin.
So Ethereum is a native cryptocurrency of a blockchain.
Yes.
So there's only like a certain number of blockchains, and then there's a million of these coins that or applications that sit on top of these blockchains, like Ethereum, Solana, or Sui. And in those cases, the tokens are the currencies for those applications.
Yeah. So like, for example, we go back to Ethereum, like Aave would be a token built on Ethereum. Yep. So Ethereum being the coin, Aave would be the token.
Yep.
Solana would again be the coin, and something like Jupiter would be the token. So it's more like, understanding that obviously there's the infrastructure, that's the coin. And like you said, the application on top, that would be tokens that get created.
Do you have any sort of methodology around investing in coins as opposed to tokens?
Yes and no. I think with coins, like you need to see fundamental growth. Like I think we spoke about at the start of this year, how to do a bit of fundamental analysis on these things. But looking at like adoption growth, investors, like who's buying, right? And for what purpose? So like Solana, for example, was a great one. It was completely oversold. Fundamentally was fine. The network itself was, from a user perspective, better than Ethereum at the time, which obviously we've seen things change.
Yep.
So for me, it's like, there's ways to do research on a coin because I'm betting on that ecosystem performing versus a token. I'm more looking at, what's the actual use case of that project? So for example, if we're seeing a payment platform spin up as a token, a lending platform, something like Asta, like those sort of trading platforms. Like, what's the USP? Like, why should people invest in that? Whereas I think the coin is a little bit easier to justify sometimes. It's a little bit long, like it's a little bit, it usually leads and then the tokens tend to follow. So for example, we saw Solana, again, just to point to Solana, do really, really well. And then we saw all of the tokens in that ecosystem do really well too.
Yeah. I think if like a useful analogy would be, if you've got a city, a coin would be the currency of that city, what you use to, spend on a daily basis. A token in this case might be something like a movie ticket or a bus ticket, right? Something that you purchase that has utility and something that you can use on a day-to-day basis.
It's just an interesting way to put it.
Yeah. So, okay. We won't dive too much more into that because we've still got a crypto ETF to explain.
Okay.
So let's look at a crypto ETF. So the difference with that is you're not holding the cryptocurrency directly. You're typically investing in a stock or a fund that holds the cryptocurrency. So you're getting exposure to, say, a crypto asset that you want to, but you're not holding it directly. So typically, you buy a cryptocurrency through an exchange or you buy a crypto ETF through a stock exchange. A crypto exchange will usually hold the asset for you, or the stock exchange, the fund manager typically manages that for you and you don't really have to worry about it. That would be the key difference, right?
Yeah, you're paying someone to basically look after it for you.
Exactly.
Yeah.
But with that, crypto ETFs often carry higher fees, and then you can't really use crypto for other purposes like sending it to other wallets and things like that. The utility is reduced when it's an ETF as opposed to holding the asset directly.
That's right.
The next one was interesting. So what causes price fluctuations?
Do you want to go this one first, Ed? I did the last one, I reckon.
Sure. So I think this one's I don't think I would have been able to answer a long time ago because I think a lot of people see the price on an exchange or just online and be like, what's making it go up and down, right? So if you were to dumb it down to really simple terms, it's purely buyers and sellers, and it's aggregated on trade volume on a number of exchanges around the world. So let's say there's a big exchange, and let's just say there's one exchange that everyone uses. There isn't in the real world case, but to simplify, let's say there's one exchange. The price is based on whether there's more buyers or more sellers. So if there's more buyers and people are buying more of this asset, then that's going to send the price higher, as opposed to if there's more sellers, the price is going to go lower, right?
Yeah, that's essentially it. Like anytime you look at a chart and you just see this big, staircase that's going green to the sky, it's because no one's selling. There's constantly people jumping in saying, hey, look, I want to invest. I want to put some money in. They buy it. For every buy that you make, there needs to be someone willing to sell it to you. So if the next person that's willing to sell it to you, let's say something's trading at $2, but no one's willing to sell it to you at $2.10, well, then you're going to buy it at $2.10 and then boom, you become like that next green candle that goes higher, right?
Yeah.
And the opposite is true too. All of a sudden, the price just stops and it goes sideways, like we're talking about what Bitcoin's doing right now. It's because every time price goes up, people are just willing to sell, and that just, again, stops it from progressing.
Yep.
Yeah.
Absolutely. Nice and simple. Okay. What is the difference between a meme coin and Bitcoin?
Meme coin and Bitcoin. Look, at the end of the day, Bitcoin, it's intrinsic value for me. So it's like, what's the reason to hold on to it long term? So Bitcoin, limited supply. It's a hedge against monetary inflation and debasement. It's been around since the GFC. It's got a lot more going for it from a long-term perspective than something like a meme coin that's just been around for 1 or 2 years, right? Anything is worth what a market is willing to believe it's worth. So like gold's a great example. Like gold's obviously been soaring and soaring and soaring, but this is never going to happen anytime soon. But what if, in 100 years' time, we start mining meteors and meteors are all of a sudden full of gold? Obviously there's going to be more supply, so that's going to be worth a lot less. So at the end of the day, Bitcoin, it is programmatic. There's only so much it gets created every 10 minutes. So that's done. That's finite. People could go choose to make Bitcoin version 2, but if no one believes in it, no one's going to buy it, right?
Yeah.
So if everyone kind of believes that this is like the staple, this is what we believe to be the digital store of value, which it currently has been, that's what gives Bitcoin a lot of its intrinsic value. And you get people just holding it, not so much selling it, that's going to push price up. Now, something like a meme coin, to me, the difference is that everything has a role. Like there's a time and place for everything. And like I very much trade meme coins, but for me, it's more like I use it as a tool when the market is getting quite volatile to get exposure. The best way I can explain it is if the market's, again, like we're talking about, there's more buyers and sellers, something like a meme coin may offer a lot more upside, but it also offers a lot more downside risks. So you basically use it as a tool to potentially grow your portfolio, but you're also not holding it for the same reasons you might be holding Bitcoin, which is more like your long-term investment potential.
Meme coins are just bets, right? Like they're highly speculative bets.
They are.
Because Bitcoin was created by an anonymous developer who sought to, provide an alternative to the traditional financial systems that we've existed in and fiat currencies, which have caused us a lot of, issues in terms of inflation. They're expensive to transact and send overseas, right? Bitcoin's a global asset. You can send it to, someone in France, and it's going to take you the same time to send it there as it is to me and you across the table, right?
Yeah.
And also the thing with meme coins that I don't think a lot of people see the risk in is that they are created for a profit. Yeah. And often the creator or the founder is holding on to 80% of the tokens. And so once, the price gets to a point where he's, made a couple of mil, he can just dump on you. And oftentimes these guys are anonymous and he or she has no problem taking profits while everyone else gets, left in the dirt, right?
Yeah.
Whereas Bitcoin in that case is decentralized. So even though there are big holders of it, it's widely decentralized across the world. And the network is secured by not just, a company or one person like a CEO. It's secured by a number of computers in a process called mining, right? Yep. Which makes it a lot more secure than, say, just a meme coin created out of thin air controlled by one dude who's just trying to make a profit.
That's right. Yeah. And I think that ties nicely into like the previous question, like, what makes price go up and down? Like a lot of people might have purchased a lot of these meme coins in the past, and then you look at something like Bitcoin, you're like, well, Bitcoin, it's only down 6%. My meme coins are down 40%. Like just the conviction in something like Bitcoin is much higher than something like a meme coin. So yeah, you just really got to understand, I think if you haven't already, just take a look at maybe your portfolio, things that aren't moving up. Simply, there's just not enough people buying it. Like right now, we are seeing Bitcoin consistently move a little bit higher every couple of months. That's that whole effect in action that we're talking about.
Yeah. Okay, this last one's a bit of a can of worms. So let's try and unpack it in the simplest way possible. So the question is very simple. It's how is crypto money? But obviously this has been a debate for a long time. I think the main thing to break down here is what are the fundamental aspects of money.
Yeah.
So like we're really going back. So what are the traditional functions of money is they can be used as a medium of exchange.
Yeah.
They're a store of value and they're a unit of account, which means they're a common measure of value used to set prices and record debts, right? Yeah. So if you go to a store, a bottle of milk is going to cost you $2.50. That's in AUD. That's in money. Right? Whereas I think a lot of concern around crypto is it's so volatile that you could never use it as a unit of account because, one day a bottle of milk is going to cost you $10 and then the next day it's going to cost you 10 cents.
Yeah, you couldn't possibly change the price tags that many times in a day, right? But that's where like the whole advent of things like stable coins, I think they maybe come to solve that problem where you have a digital currency that is pegged to a real Aussie dollar, a real US dollar, a real sterling, euro, whatever.
Yeah.
But yeah, you're right. Like I think there's a little bit of a misnomer. Like when you hear the word cryptocurrency and you hear Bitcoin, you're instantly like, why would I use that as money? It's definitely a case of like, obviously that's what it's been dubbed and labeled, but over time, like our understanding of what Bitcoin is and what it serves as a purpose is really different. Even something like Ethereum and Solana, these days I think of it more of like a software than I do a currency by any means. Like, don't get me wrong, there are ways that you can spend your crypto. I'm not saying that.
And there are vendors that accept Bitcoin and cryptocurrencies as payment.
Absolutely. But when you think about like the user experience, like you said, just yes or no, is the amount the same today or tomorrow? Like, no. So instantly it's like not the ideal user flow, I guess, if they're trying to work out store of value.
Yeah, exactly. Well, I think Bitcoin could potentially tick a few of those boxes because, it can be used as a medium of exchange. It's not the most ideal option. It's considered a store of value. Like look at it over the last 10 years, it's gone up and up.
That's true.
As opposed to a lot of fiat currencies, which we have inflation. So the purchasing power of those dollars goes down. Yeah. But obviously it's very volatile. So if you get paid one week, it might, be half as what you get paid next week. You know what I mean?
Yeah.
So it's tough in that aspect, but I think as well, it's, it's divisible, it's portable, it's accessible, all the things that you want from a a currency. But I think, yeah, as you said, like over the years, we've kind of seen Bitcoin and cryptocurrencies as more of an investment, and that's what they're considered by most countries in the world, particularly in Australia. Like if you make money on Bitcoin, it's considered a capital gain. You need to pay capital gains tax on it.
Yeah.
If it was considered, a currency, that would just be considered, income. Like we don't have to pay tax on the rising value of the Australian dollar, right?
Yeah, true.
So I think that's what has been determined. I don't think it's going to be the way forever, but as you said, like stable coins have sort of slotted in to fit that use case because they're not volatile. They're pegged to a fiat currency like the US dollar, so you can transact. They're easy to send across the world. They have a few more benefits than just your traditional fiat currencies.
No, that's it. I think it's moving away from that idea of all cryptocurrencies are money, like as your default way of thinking. You've just got to think of it like you said. It's like an emerging tech sector.
Yeah.
And yeah, it's just about taking the couple of steps to understand it bit by bit. Yeah.
Absolutely. Yeah, I can't imagine we'll be paying for our groceries with dog with fat anytime soon.
Oh, maybe.
I mean,
maybe a bit of pepper.
Business idea.
Business idea.
Yeah.
Dog with groceries.
Well, we might leave it there. Those are the 4 questions.
Was that all right? Was there any? Did we cover everything?
That was the 4 questions we had down. But we might do that again just to kind of bring people up to speed as people start to enter the market again. I think it's actually good for even people who are experienced, so they
totally.
can sort of nail down the fundamentals, sharpen up, and even explain it to people they know as well.
It's got to be a conversation, right? Like if no one talks about it, nothing happens.
Exactly.
So,
yeah,
good.
I've got a bit of a funny story. I was at the family barbecue, that we always talk about.
Cliche barbecue.
Yeah, I actually was at one on the weekend, and I was like making drinks because it was for my parents' like birthday, and one of them said they just invested in Bitcoin.
Okay.
And then they're like, but I'm looking into this Ethereum, and then a guy next to him asked, should I invest in Ethereum? Is Ethereum better? And I was like, oh, here we go. And I tried to break down the core differences, because there is a big difference between Ethereum and Bitcoin. They're not just two separate cryptocurrencies.
Yeah.
And I just saw the blank look in their face, and you could just
they just regretted asking.
The lights were on, but no one was home, and and I was like, yeah, okay, I need to sharpen up on this.
Yeah. It'll get to a point where I think as the technology evolves, it becomes easier to explain what it does, right?
We need to get in schools, mate.
Yeah, we could do it early, then no one has any questions, right?
Yeah.
Everyone just knows.
Well, exactly. If you learn it from, the age of 10, then it's not a hard concept to understand when you're later on in life learning the harder technicals of it.
That's true.
There you go. Anyway, bit of a tangent there, but we'll leave it there and chat to you guys next week.
Yeah, any questions that you have that kind of fit that vein of what we're talking about? We'd like to keep this going as a weekly theme, so just let us know in the comments. We'll love to hear from you.
Later, skaters.
Later, skaters. See ya.